Yeah, you don't know all the shit that I've been through, all the pain and the struggle that I lived through. Now I'm rolling up these papers that I smoked through, thinking about all the shit that I've been through. You don't know all the shit that I've been through, all the pain and the struggle that I lived through. Now I'm rolling up these papers that I smoked through, thinking about all the shit that I've been through. Now I'm sipping on this whiskey, got one chance and it's risky, so you can't play around. And I got my team behind me like a background. I don't never back down, picking up the slack now. Now I'm focused, keep on grinding for my stacks now. I'm feeling lost in this ocean, where's a lighthouse? I keep on swinging for the fence and I ain't strike out. And yeah, that's how I'm feeling, yeah, that's how I'm feeling now. We're not here for a long time, yeah. It's 9 to 5, it's a long grind, yeah. A ladder to success, it's a long climb, yeah. Now I'm sitting here making up for time, yeah. Man, I took so many losses that I lost count. I didn't know what I was made of, but I found out. And this life will blindside, you better look out. These haters wanna see you fall and get you took out, yeah. Cause I fell on my face, and this life is a race. I keep on checking my place. Now I'm riding for my team, you can tell by my plates. And this life just threw a hook, it caught me right in the face. But I'm getting back up, I'll do whatever it takes. I'll climb a couple of mountains, I'll swim a couple of lakes. Don't got time for the bitching, don't got time for complaints. Now you going through some shit, now tell me how does it taste? You don't know all the shit that I've been through, all the pain and the struggle that I lived through. Now I'm rolling up these papers that I smoked through, thinking about all the shit that I've been through. You don't know all the shit that I've been through, all the pain and the struggle that I lived through. Now I'm rolling up these papers that I smoked through, thinking about all the shit that I've been through. Now I'm living with my choices, I just own my mistakes. Cause I'm screaming fucking handout, I ain't searching for breaks. But I'm barely treading water and this life is the lake. Now the pressure keeps on building as I'm raising the stakes. I ain't looking for advice, now I'm looking for space. Now I'm dealing with these losses, but I know I hate the taste. Now I'm sitting back, I'm thinking as I smoke it to the face. Now it's time for these apologies, the time is too late. So bygones be bygones, I'm on business with a tie on. So fuck a shoulder to cry on, I'ma get a hopper like Zion. Let's raise a glass, I'll toast that. Reminisce, we roast that. How I wrote them and ain't wrote back. I'm never flimsy, the goat's backs. I don't feel bad, no not at all. With a lot of years, write a lot of calls, a lot of birthdays without a call. Ain't got time for that, so fuck a fraud. You ain't there for me, I ain't there for you. You won't bleed for me, I won't bleed for you. All the hard times I lived through, keep moving, gotta get through. I got goals and cash I gotta get to, all these memories that I flipped through. If you can't relate, then don't judge. I'll stand my ground, I won't budge. I'm sitting back cause I burn buds, I swear to God this life's good. You don't know all the shit that I've been through, all the pain and the struggle that I lived through. Now I'm rolling up these papers that I smoked through, thinking about all the shit that I've been through. You don't know all the shit that I've been through, all the pain and the struggle that I lived through. Now I'm rolling up these papers that I smoked through, thinking about all the shit that I've been through.
J Squad.
Let me so goddamn rich.
I think it's time to blow this thing. Get everybody in the stuff together. Okay, 3, 2, 1, let's go.
Getting fucking rich. I want my fucking money. Griffin, I want my fucking money. Yo, motherfucker. Holy shit, we're gonna be so fucking rich. Damn it, we're gonna be so fucking rich. Griffin. I want my fucking money.
You're an original,
Hey,
aren't
yelling,
you?
give me the fucking money. Get the goddamn money printer out.
Great. Bounty letter.
We're gonna be so fucking rich. Get the goddamn money printer out. Gary Gensler, I want my fucking money. 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 I want my fucking money. Gary Gensler, I want my fucking money. Money. I want my fucking money. Gary Gensler, I want my fucking money. 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 I want my fucking money. Gary Gensler, I want my fucking money.
Man's right, you know.
Money.
I do indeed want my
I want my
motherfucker.
fucking money.
All right, that's about enough of that. How's it going, everybody? It's Marcel Kalinovic, Butcher of Wall Street. It's great to be here with you all. So today, some of you may notice I decided not to wear my hat, and that doesn't really mean anything other than I just don't feel like wearing my fucking hat as much as I love them. I got a, oh, you can't even see it, but I got my collection of hats over there. And I'll still wear my Mo astronaut helmet. So yeah, there's no real underlying meaning to that. I just don't feel like wearing it. FTDs everywhere. What's going on, Maximus, Average 8, Matthew Smith, everyone here in the think tank? I appreciate you guys. It's good to see all you. Yeah, Cash Money's here with me. Zoombach, Pickle Snake, Captain Awesome, Black Widow. Great to have all you boys and girls here with me. As you can see from S3 Partners' recent post on Twitter, the company with the highest stock borrow fees on the New York Stock Exchange, with over $50 million worth of short interest and above, is the one and only AMC Entertainment. There's a big difference here between number 1 and 2. AMC, for example, is on the verge of paying off a vast amount of their debt, if not all of their debt, with a conversion and a reverse split vote, as well as some dilution that's very possible here in the short-term future, with a vote that's occurring on March 14th. March 14th, 2023. Bed Bath and Beyond, however, is in a very different situation. They're in the clutches of death spiral financing, basically. They are in a situation where the only thing they can really do is take more loans. And that's vastly different from AMC, which is increasing their yearly revenue and profits and earnings and EBITDA and adjusted EBITDA. So the situations there are vastly different. Not to mention Bed Bath & Beyond, which is in the clutches of death spiral financing, only has $96.7 million worth of short interest, whereas AMC Entertainment has over $875,754,894 worth of self-reported short interest, which is around 25.87% of the outstanding shares of the actual float. The borrow fee of AMC is around 142.57%, much greater than that of even the remaining ones. And a lot of people seem to fail to realize that even though it's APR, and not daily, that imagine paying 142% APR on your fucking mortgage or on your car note. Good luck making that payment month after month after month, year after year. It can only last so long. As you can see here, my friend US James 0826 posted AMC. As of yesterday, AMC was on the threshold securities list for 22 days. Today makes 23. Today is 23 days straight, as of March 7th, 2023, that AMC is on the New York Stock Exchange Reg SHO threshold securities list. And this entire video is going to be Adam Aaron's most recent post. And he states, CEO Adam Aaron says, many of you and we are aware that AMC Entertainment has been on the threshold list for over 3 weeks, indicating a number of failures to deliver. Some of you may be pleased to learn that we have contacted both FINRA and the New York Stock Exchange, asking that they both look closely at the trading of our stock. And I absolutely love this response from AMC Ape. He says, I figured out what they're doing. They FTD their Ftd'S that were FTD'd from previous Ftd'S, which were FTD'd from the Ftd'S at the beginning Ftd'S, that were FTD'd in replace of the very first Ftd'S, then switched over to Ftd'S in order to FTD their future Ftd'S. And it's hilarious, but the fact of the matter is, he's not wrong. He's not wrong. It's so fucking asinine and ridiculous. But the guy's got a great point. And the fact of the matter is this. I'm going to take you on a journey here. And this journey is a comprehensive list. Let me just adjust this a little bit. This journey that we're about to go on is a comprehensive list of what is the Reg SHO threshold securities list and how can market makers and broker dealers and hedge funds, prime brokers, avoid what's happening with their failures to deliver and avoid closing out their positions. Check this out, my friends. So AMC, first of all, cheers. Drink them if you got them. Smoke them if you got them. I'm drinking LaCroix. I recently quit drinking just for kicks. I don't enjoy the hangovers, but I will take a toke with y'all.
Cheers.
Cheers, brother. And at the end of this, you may leave yourself wondering, wow, there are endless ways to kick the can. How is retail ever going to make money? Well, my friends, I wouldn't be here if I wasn't planning on making a shitload of fucking money. And I still believe that we're going to be filthy fucking rich. I'll tell you that much. But again, I'm not a financial advisor. This is not financial advice. Don't take my word for it. Do your own due diligence. I'm just sharing information on Reg SHO, threshold securities list, and it's for you to decide what you want to do. So, Adam Aaron has called upon FINRA and the New York Stock Exchange yet again to investigate the failures to deliver on AMC stock, as we are at 23 plus days now, 23 consecutive days on the Reg SHO threshold securities list. As you can see here, the first date that it was actually on the list was February 2nd of 2023, but the issues began much, much earlier than this. So, to get right into it, I wrote a 46 tweet thread just to get the point across. So, a threshold list, also known as a Regulation SHO, threshold securities list, is a list of securities whose transactions failed to clear for 5 consecutive settlement days at a registered clearing agency. Settlement failures may be indicative of improper naked short selling, which is technically illegal. The SEC implemented Reg SHO to reduce the abuses of naked short selling, where the seller does not borrow or arrange to borrow the securities in time to make delivery to the buyer within the standard 2-day settlement period. As a result, the seller fails to deliver securities to the buyer when delivery is due, known as a failure to deliver, FTD. When naked short selling occurs and affected securities are not delivered, much like AMC for the last 23 days, these failed transactions are reported regularly on a threshold list. And this occurs by the broker-dealers, not by the Securities Exchange Commission, not by FINRA, but the broker-dealers themselves. And other regulators can then identify clues of improper naked short selling. In order to appear on threshold, a security must be registered with the SEC and fail to settle for 5 or more consecutive days. The failed settlements must also involve a transaction size totaling 10,000 shares or more, or at least 0.5% of the security's shares outstanding. Reset transactions. The activity that prompted the SEC's risk alert generally involves hard-to-borrow securities in which the options put to call parity is imbalanced. If a market maker does not deliver shares when he needs to, but instead engages in the second transaction to give the appearance of satisfying the closeout requirements while maintaining the original short position, he will then be deemed not to have closed out his position at all. This is called the reset transactions. And reset transactions are usually accomplished through the use of a buy-right trade, an option, but may also employ a married put. And if you've been in this channel for a while, you've heard a lot about married and divorced puts. And they may incorporate the use of short-term flex options. Hence, our friends in the ISDA banks really doing everything they can to use swaps and options to manipulate the markets. To satisfy the closeout requirements, buy rights, married puts, or both, particularly deep in the money buy rights and married puts to satisfy the closeout requirement can be used. Now, there's a rule called Rule 203A, and it states that if a broker-dealer, such as, for example, IBKR, or Fidelity, or Schwab, Webull, have reasonable grounds to believe that the security can be borrowed without having borrowed the stock and delivered on or before the date that the delivery is due, they can naked short. This is much to what affected this greatly was FTX and Bittrex and the synthetic phantom shares that they created by using their tokenized securities. So their TSOs that didn't really hold AMC or GameStop were used to give brokers reasonable grounds to believe that the security can be borrowed without actually having borrowed the stock. And we've all seen what's happened since the collapse of FTX. AMC has continued to climb in short interest, and the cost to borrow has risen greatly to around 1,000% average, and has come back down recently to around 200 to 300% average, to no great surprise. Because again, everything is being manipulated. Regardless, these are still absolutely ridiculous numbers. 200 to 300% cost to borrow average is astronomical. There is considerable ambiguity in the SEC's reasonable belief definitions, and easy and hard to borrow lists are created and maintained by broker-dealers, not the Securities Exchange Commission. This is a big problem with the broker-dealers that we're currently seeing and using. These lists are subjective with no standard guidelines. This vague rule enables illegal naked shorting, period. In addition, brokers can also use the DTC's stock borrow program to circumvent this requirement. Some brokers like IBKR are changing their terms of service in order to borrow securities without clients' permissions. Let's take a look. Oh, apparently I'm a cult leader. Oh no, I have a cult leader. Oh, geez, I can't believe it. Are you guys in a cult? Did I give you the Kool-Aid?
Damn it, Manson.
God damn it. How dare I? How dare I give you the Kool-Aid of truth? So, some of you may have seen on my Twitter posts that I'm leaving Interactive Brokers. And I'm not actually going to do that until after the March 14th vote occurs. Because I have to make sure that all of my tens of thousands of yes votes are counted. In order to do that, I'm going to stay with IBKR until after March 14th, about 7 more days from now. So, I will be changing broker dealers. Eventually, I'll be going to my own broker dealer, and I'll explain that later. But for now, I've got to dance with the devil. Now, market makers are granted exceptions to the locate provision. Reg SHO exempts bona fide market makers from locate requirements that apply to ordinary investors because it believes that it's necessary to facilitate customers' orders and maintain liquidity in fast-moving markets. Therefore, market makers are not required to adhere to the locate rule. They can naked short a stock without a locate. All of the prime brokers are market makers and also operate hedge funds, which they euphemistically refer to as proprietary trading, using their what? Algorithms, right? Also, some of the larger hedge funds expanded their business model to include market making. Ring a bell? These widely accepted business models often result in avoiding the locate provision of Reg SHO. Can't see my screen, apologies. These prominent market participants can implement speculative short selling by masquerading as bona fide market makers. The SEC seldom can differentiate between market making and speculative trading. So the SEC can't tell the difference of when it is a market maker exemption or speculative trading that's occurring. That is one of the reasons, in my opinion, why Adam Aaron and AMC rightfully decided to ask the SEC and FINRA to look into the trading occurring on AMC. Now, the closeout requirement is Rule 204 of Reg SHO, which covers the situation in which the short sellers fail to deliver the stock at the determined settlement time. If this occurs, Rule 204 requires action on part of the brokers and dealers from whom the stock was borrowed to close out the trade by demanding that the short seller buy the stock in the open market. Settlements are made 2 days after a stock trade, and this rule requires that the short seller must close out an FTD no later than the beginning of regular trading on the first day after the settlement date. This may sound a little complicated, but that's basically 3 days after the trade. It's referred to as T+2. And of course, there are exemptions to this as well, because why the fuck wouldn't there be, right? If a broker-dealer has an FTD, they can demonstrate that this resulted from bona fide market-making activities. The closeout of the FTD can be extended to the 3rd day after the scheduled settlement day, adding more time. This makes it now T+5. And this rule, too, is easily avoided. There are securities that have large and persistent fails to deliver that are a hallmark of illegal naked shorting, such as AMC, which has for, well, what is it now? 23 straight days been on the Reg SHO threshold list. Check this out. If the security remains on threshold list for 13 days, T+13, whoever was responsible for delivering shares 13 days earlier, likely a broker-dealer or market maker, must close out the failed position by purchasing equivalent shares in the open market. But unlike the locate requirements of Rule 203A, market makers are not exempt from these closeout requirements. Many companies remain on the threshold list for months at a time. And the last time that we saw, for example, GameStop on the Reg SHO threshold securities list for 37 days, it ran to new all-time highs, January 27th and 28th of 2021. Now, this can be explained in practice, in which the FTDs are rolled over from one brokerage house to another. Basically, this is how they can kick the can. Again, after 13 days, a market maker that naked shorted the shares is required by Reg SHO to buy shares in the open market and deliver them. However, before the closeout requirements are triggered on day 13, the market maker can transfer the position to another willing market maker or broker, and the 13-day countdown to a mandatory buy-in starts all over. It's as simple as moving from one place to another to another. And I thank you very much, Grandpa Barney, and thank you, MC. I really appreciate you guys for your support. Grandpa Barney says, "Boss, this is for you to buy a boot to kick the butt of anyone who said I drank the Kool-Aid." Nice and deep. Well, thanks for your contribution, my friend, the think tank, and I appreciate you truly. So, this frequently used Wall Street trading technique of kicking the can allows failures to deliver to remain for months or even years. And I'm going to give you some example techniques that are used to circumvent Reg SHO. Permitting important hedge fund clients to bypass the locate requirement when entering shares. Creating and distributing easy to borrow lists that improperly include threshold and hard to borrow securities to the firm's proprietary traders and clients. Concealing failures to deliver through washed and matched trades, rolling over an FTD to another broker-dealer. Transacting illegal stock sales in dark pools and the OTC off the primary markets to avoid the New York Stock Exchange oversight and to maintain anonymity. Failing to reasonably supervise that locates were obtained and or documented for short sales. Falsely marking shorts as long. It's really that simple. Instead of clicking X, they can click Y. Instead of clicking Y, they can click no, N for no. It doesn't fucking matter. 25.87% short interest is self-reported. I can only imagine what the actual short interest and married puts and swaps and futures and options contracts, divorce puts, and everything else that's going on here really is. Falsely representing that they either possessed the borrowed securities or had located them for borrowing and delivery, much to what occurred during FTX and Bitrex's issuance of phantom shares of AMC and GameStop and other meme stocks. Bitrex, for example, issued their tokenized securities on January 28th of 2021 in order for them to act as share locates. This is almost a clear indication and an allegation on my part that Bitrex and FTX worked hand in hand with market makers and short hedge funds in order to suppress the price action on GameStop and AMC during their all-time highs, when broker-dealers, who were also allegedly working in conjunction with those same parties, pulled the buy button and did not allow retail to buy more shares of AMC, GameStop, and COS. Failing to make legitimate or reasonable efforts to locate shares prior to short selling. Entering into fictitious options contracts to conceal naked short sales. Using the DTC stock borrowing program as a means to conceal naked short sales. Submitting fake short interest and other reports to regulators. Concealing their activity through falsely reporting shares created through illegal naked shorting as shares in brokerage statements of investors as if these assets were representative of real shares, concealing their activity by issuing voting material to shareholders with non-existent assets who have no corporate rights, including the right to vote shares. They can kick the can by failing to comply with responsibilities and duties to investigate and report suspicious transactions to the regulatory authorities. And of course, my favorite of all, they can file alleged frivolous lawsuits in order to delay corporate vote actions that could force them to close their positions on securities like APE, AMC, and AMC1. And ladies and gentlemen, that is, in my opinion, the only reason that a firm with 0.1% of their holdings being AMC shares held within an ETF would file a frivolous lawsuit against them. For those of you that are unaware, there's a frivolous lawsuit being filed against AMC, and a judge will be overseeing it in the coming weeks. In my best guess, the judge will probably throw it out because it's complete fucking garbage. Again, I'm not a financial advisor, and this is not advice. You do whatever the hell you want. But the vote is still going to occur on March 14th, and the judgment will occur on or before April 28th, 2023. So anytime before April 28th, 2023, the judge could throw out the case, possibly, and that would allow AMC, if the vote passes, to do a conversion and a reverse split of APE into AMC on a 1-to-1 basis. So every APE would become a share of AMC, and then the reverse split would make AMC split 10 shares combined into one share, and the stock price theoretically go up 10 times. But it's not really a 1-for-10 stock split because APE is being converted into AMC first. And if, for most people that didn't sell their APE, if they were previous holders, they're holders of APE and AMC, it would actually be more of a 1-to-5 stock split because APE would double the number of AMC they have if they hadn't purchased any since the initial issuance of APE. Many people, such as myself, have continued to buy shares of APE and AMC, and I very much look forward to the conversion and reverse split occurring. There's a large amount of fear, uncertainty, and doubt in regards to this conversion or reverse split, but I have a vast amount of money in it. And for me, personally, I think that the conversion or reverse split would be one of the best things that could possibly currently happen to the company, in addition to the fact that it would allow them to sell shares of AMC in order to pay down their debt. And paying down their debt thus kills the short thesis even further. And will also, because there are fewer shares available, the actual share locates themselves will also be more difficult, making it harder for companies, for these shorts, to remove AMC from the Reg SHO threshold securities list, increasing volatility and possibly greatly increasing my floor price. Now, there's been an elimination of the Uptick rule. Another noteworthy change in rules governing short selling was the elimination of the Uptick rule that required an increase in the stock price before allowing a short sale. And Bernie Madoff successfully led the effort to eliminate the Uptick rule in 2007. Madoff's firm was both a market maker and a hedge fund, sound familiar? And an enthusiastic participant in illegal naked shorting. This was secondary, of course, to Bernie Madoff's money management pyramid scheme. Until the latter was discovered, Madoff was a highly respected source of input for the exchanges and the Securities Exchange Commission. And he's widely given credit for getting rid of the Uptick rule. The SEC endorsed and defended the decision, stating that the Uptick rule reduced liquidity. This is another example of the Securities Exchange Commission placing greater importance on liquidity to the benefit of Wall Street than on actually protecting retail investors from predatory Wall Street trading practices. That's what this is all about. It's about market manipulation that's occurring and predatory trading practices in order to try to naked short and short a company into oblivion, because then all of those securities that were sold do not have to be purchased back. And if they do not have to be purchased back, then nothing has to be reported to the Internal Revenue Service. And if nothing has to be reported to the IRS, then all of those securities that were sold but not yet purchased become free, untaxed money. And because of that, my friends, I'm currently working on a broker-dealer called Lit Exchange. And Lit Exchange is not currently licensed as a broker-dealer, and we are not acting as a broker-dealer, but we are in the process of development. We have been since September of 2021, and we expect to later this year to get our licensure, approvals and everything from FINRA, and that's part of the reason why I'm getting my securities industry essentials exam certification, as well as my Series 7, 24, and 63 certifications to become a financial advisor, in order to be able to oversee Lit Exchange on the floor as the CEO. So coming soon, there will be a stock and crypto trading app with wallet support, and our whole goal will be to empower retail's rights to market equality and to route orders directly to lit markets. Our goal will be to not borrow shares without users' consent. And some broker-dealers are changing their terms of service in order to now allow those in Europe and allow them to borrow shares from clients in Europe and those in the United States and Canada with over a certain number and a certain dollar amount of worth of shares, in order for them to use them on the DTC's stock borrow program. That is one of the reasons why I am going to be leaving Interactive Broker, IBKR, after March 14th, 2023, because I am waiting for the AMC vote to go through. If you'd like to learn more about Lit Exchange, it's up there on the screen, litxchange.app. You can sign up to be a beta tester. We do have already I believe we already have the beta testing is already full, but this is not a solicitation to buy, sell, or hold any securities or products of any kind, but you can apply to become another beta tester should some of the applicants not respond or not be eligible to be beta testers. We will never sell or give away your email address or any personal information at any time. This will be the first broker-dealer in the history of the world that is for retail, by retail. And the whole purpose of this is simply because I'm tired of watching retail get fucked. And I keep telling myself, damn, I wish I had a broker where I can move my fucking shares and I don't have to worry about them changing their terms of service for them to lend out my shares. I wish I had a broker that would automatically route all my orders to lit markets without me having to go in and try to change certain settings or sign up for a pro account or etc., pay additional fees, etc. I'm tired of being used for payment for order flow, in which my orders are transacted through the OTC by market makers, in which they can be front run and manipulated. I'm absolutely tired of the lack of transparency and the lack of high quality user interfaces and educational tools, and that needs to change. Because of that, I implore you to look into litexchange.app. Now, I think I've said enough. Huge shout out and thanks to Big Tide Redemption. He says, big shout out to all the good folks here. You know who you are. A big middle finger to all the haters. Cheers. Cheers, my friends. I wish you peace and wealth. And yes, I'm still going to be filthy fucking rich on AMC. I wouldn't be surprised. If we all were. Not in the slightest. Unless you're a paper-handed bitch, that is.
Filthy rich.
Filthy fucking rich.
So goddamn rich.
That money printer out.
It's really only a matter of time before margin calls occur. I wouldn't be surprised to see it happen much like it did in 2008, when 30 days after the worst day in the history of the S&P 500, Volkswagen ran to new all-time highs. Revised GDP figures for the fourth quarter show that the core PCE index was firmer than previously estimated. It rose at 4.3% annualized rate, up from an earlier estimation of 3.9%. And core inflation was 4.8% year over year, initially reported at 4.7%. And before that, if you take in 24-month trailing CPI, inflation is much, much higher. It's actually around the 14% mark. 14% month over month inflation over the last 24 months, trailing. The S&P 500 just fell over 40 points, and a 50 basis point rate hike is now expected later this month. Meanwhile, the VIX volatility index turned negative as the S&P SPX hit a new low of the day. The VIX is still below 45, about 150% below the value of 45, the level that was always been crossed before every bear market has bottomed since the VIX was created. The reason that zero day to expiry options were implemented was, in my honest opinion, to crush the volatility index via Janet Yellen's plunge protection team and their large cash infusions. Eventually, everything will backfire, and no cash infusion, no matter how great, will overcome an inevitable crash. According to JP Morgan, they say that 0 day to expiry options could turn a 5% decline into a 25% rout in just minutes. Minutes. It's a worst case scenario, but directionally, I think it's correct. The explosion in the use of short dated options will massively increase volatility. Their recent growth has been eyed as one cause of intraday volatility, and even my bizarro world counterpart, JP Morgan's Marcel Kalinovic, stated last month that they could spark a massive volatility event under certain circumstances. And I think on this one, he definitely hit the nail on the head. The attempt to further quantify the derivative's potential impact, estimating that in an extremely dire scenario, 0 DTE options could turn an intraday 5% drop in the S&P 500 into a 25% rout, a magnitude of decline not seen since the Black Monday crash of 1987, when the index fell 20.5%, according to JP Morgan and Reuters. Such a scenario could occur if the S&P 500 fell just 5% in 5 minutes, triggering almost $31 billion in 0 DTE option-related trading that would tack on another 20 percentage points on the index's decline. If the S&P 500 fell between 1% and 5% in just a few minutes, 5 minutes, it could lead to an unwinding of positions in the range of $6.6 to $14.2 billion. That's billions with an S, translating to an additional 4 to 8% of decline. JP analysts say the estimated market impacts from unwinding of 0 D options exceed the original market shocks in all scenarios, highlighting the reflexive nature of the 0 D options and their potential risk posed to market stability. Furthermore, JP Morgan notes that retail traders are not the main driver of volume growth in 0 DTE options, with individual investors accounting for only about 20% of the S&P 500 ETF trust options volume and only around 5% of the S&P 500 same-day options. I do enjoy trading those options. because they're extremely risky and they can be extremely lucrative. But you can lose your ass in a heartbeat, and many times over, as a matter of fact, if you're on margin trading 0 DTE options. It is extremely dangerous, can be extremely painful, and extremely rewarding. And because of that, I truly believe that this is the reason that Janet Yellen and the plunge protection team helped to create 0 data expiry options in order to suppress the volatility index and cause gamma squeezes on the S&P 500, all of which helped to prevent a market crash so far. But nothing lasts forever. Nothing lasts forever. And to think so is absolutely irresponsible, ignorant, and uneducated. Because of that, I wouldn't be surprised to see a stock market crash and then margin calls go out on heavily shorted securities such as AMC and even Bed Bath and Beyond, Beyond Meat, EVGO, Canopy, Upstart, many, many companies. Some good that are paying off their debt like AMC and have no debt like GameStop, and some not so good that are in the throes of death spiral financing like Bed Bath and Beyond and Carvana. That being said, Janet Yellen, get that fucking money printer out because you're going to need it. Bring me my fucking money. Here's the proof for those that are not aware. IBKR is changing its rules. They can lend all your assets if they want and need to. Someone took a screenshot of the UK. I'm not going to be DRSing my shares. I think DRS is garbage. I've explained this 100 times, so I'm not going to get into that right now. But as you can see here on item C3 of their terms of service, they say under stock lending activity, our right to use your assets. IBKR thinks they have a right to use my assets? You consent to IBLLC and its affiliates undertaking or engaging in stock lending activity and the lending of your collateral, securities, or other property, including but not limited to using your collateral, securities, or other property for their own accounts or for the accounts of other clients, and lending either to themselves, to their affiliates, to others, any of your collateral, securities, and other property held by IB LLC in your IB UK accounts. Per my understanding, this also applies to accounts in the United States that have over a certain dollar amount worth of securities. I have over that dollar amount worth of securities. So that's one of many reasons why I'm going to be moving out of IBKR. Probably on March 15th, the day after AMC has their vote. And I'm very much looking forward to that. A lot of people are going to ask me what broker I'm going to. I have not yet decided. There's a lot of brokers out there, and the majority of them are shit. And that's why I'm creating this. Because I have nowhere better to go. I have nowhere to go that I feel comfortable, that is not going to pull the wool over my eyes, that's not going to front run my trades, that's not going to send my order through payment for order flow to be abused on the OTC by market makers and hedge funds. This is the only thing I can possibly think of to do, is to create my own fucking broker. The United States has $16.5 trillion in household debt. That's a record. The United States has $11.9 trillion in mortgages. That's a record. The United States has $1.6 trillion in automobile debt. That's a record. The United States has a record $986 billion in credit card debt. You got it. That's a record. Total mortgage debt is now more than double what it was at the peak of 2006. Meanwhile, 36% of Americans have more credit card debt than savings, with balances that are rising at the fastest rate since 1999. That's a record. This is all while mortgage rates just hit 7.1% and credit card debt rates hit another record, 24.9%. This is not going to end well for the majority of people. But I feel very well hedged. I have tangible assets. I have heavily shorted stocks. I own other assets as well, on and off the stock market. But the majority of people are not willing to listen, and they do not understand what is happening. The fact of the matter is that certain companies like Citadel Securities have managed to reduce some of their securities sold, not yet purchased liabilities, but still hold over $47 billion worth. The reduction was simply moved, for the most part, to derivatives. The total gross derivatives contracts has increased by hundreds of billions on the average quarterly notional derivatives liabilities. All this means is that trades were moved, or is that instead of using securities sold, not yet purchased, those liabilities have been moved to swaps and futures and flex options, etc. And at the same time, those heavily over-leveraged prime brokers, market makers, short hedge funds, family offices hold a lot of Chinese collateral. For example, Evergrande. And Evergrande has failed to win the creditor's support as key dates loom. Their bankruptcy court date begins on March 20th. And they have yet to reach an agreement with major creditors on a debt restructuring framework that is crucial in order for them to avoid potential court-ordered asset liquidation, according to Bloomberg. Court date is set for March 20th. I don't know what's going to happen. But they are not in agreement. And currently, even though Evergrande is not trading, all of those shares that have ceased to be trading are still valid is the collateral, trading on their historical value. If Evergrande becomes insolvent or is ordered liquidated by the court, hundreds of billions of dollars worth of ISDA collateral would become instantly worthless. And if not Evergrande, then another Chinese property developer, Canadian or European or American, you get the idea. Currently, Blackstone has defaulted on on a $525 million commercial mortgage-backed security loan. Blackstone has defaulted, and it is just the beginning. Ladies and gentlemen, I'll leave you with that. I don't want this video to get too long because I actually want people to watch it. Huge shout out to MC. Thank you so much for your support, my friend. You are too kind. And thank you for earlier as well. Riptide, Grandpa Barney, everybody, I really appreciate you. I'm still going to wear my Mo astronaut helmet because we're still going to the fucking moon. But I feel bad for those people that are either too stupid or too poor to do anything to help themselves. Best I can do is maybe provide them a job afterwards and some cheap housing. Because you can only lead a horse to water. You cannot force him to drink. Have a great day, everybody. Have a great evening.
Gonna be so goddamn rich.
I think it's time to blow this thing. Get everybody in the stuff together. Okay, 3, 2, 1, let's go.
Gonna be fucking rich. I want my fucking money. Griffin, I want my fucking money. Yo, motherfucker. Holy shit, we're gonna be so fucking rich.
Great.
Damn it, we're gonna be so fucking rich. Griffin, I want my fucking money.
You're an original,
Hey,
aren't
yelling,
you?
give me the fucking money. Get the goddamn money printer out.
Great. Bounty hunter.
We're gonna be so fucking rich. Get the goddamn money printer out.